If you like this video, make sure to subscribe to our channel and hit the notification bell icon to get the latest updates.
So let's start. So just to have a quick recap over last activity, we discussed four structure: organization structure, people structure, financial structure, and then we discussed Workday structure, and we mapped it, how it will map. It depends on the organization. So we did some mapping as well based on the structure that we have discussed. Today, what we will focus on the financial structure and the account type, and then coming towards the activity part, and this is our activity part here. So let's start. So account type. So we discussed that there are, as per accounting standard, we have 5 account type: assets, liabilities, capital, and expense, and revenue. Give me 1 minute, please. Okay, so these are the account type that we have it as per the standard, and our charts of account based on these account type. So how it can be, because it's charts of account, if efficiently designed, then our reporting will be more convenient or more useful then. So we have to be very careful to design this charts of account. How to design this charts of account? That is very simple. So first of all, the segregation of the assets are into 2 types. One is called current assets, and another one is called fixed assets. Current assets means that we have cash, bank, account receivables, and investment. Whereas fixed assets are like building, plant, and furthermore building, plant, vehicles, furniture and fixture. There are. Okay, now if I have to design my charts of account, so we identify, or we basically assign the identifier to these names. For example, my charts of account started with current assets, started with 1000. Okay, let me do a one drop. So my overall assets will be started from 1000 to 1,999. Overall, my asset it will be. Now here, current assets, if I talk about the current asset, then I would assign that it started with 1001 to 1499. Meaning that in this range, first 500 will be assigned to current assets, and then next 500 we will assign to 1500 to 1999. Now here I would assign these codes. Now in this range I would assign these here, that cash will be my 1010, bank will be 1020, and that is 100, and that is 1250. So these identifier, this called identifier, we are assigning code to our account type. So we have said that there is assets, there is 2 types, fixed asset and current assets, and then we further segregate and assign these codes as well. So if I want to check that how many assets do we have, overall assets, then I will take the range 1000 to 199. If I want to check current assets, then this is my range. If I want to specify the bank, then it will be 1020. At how many bank balance that we have it. Current assets are those that are easily liquidate. In business. Because cash is your current asset, bank, AR, investment, these are the current assets. Whereas fixed assets are not easily liquidate. They are fixed in nature. Okay. So building, if I want to, I need urgent amount, so I will sell out my building. So building might sell it today or maybe take 1 year or 2 years. So these are not readily available cash for me, but these are the readily cash are available. So that's why we say that this is current assets and this is fixed assets. Similarly, we have liabilities. We have two types of liabilities. One is short term and other is long term. Okay, and we design this thing similar way. Short term are those that are short term in nature, meaning that the liabilities that you have paid less than a year, less than a year. If that liability you have to pay, that called short term, like loans, like accounts payable. These are my short term liability. Okay, and if I say that again, I would assign the number here. The same logic will be 2000, and that will 2999. And here I would say that 2001 to 2499, and it will be 2500 to 2999. Long-term liabilities are bank loans, and then we have long-term liability is bank loans, and then you have that is accounts payable here in interest. That is a short-term liability, interest payable. Interest payable. So these are the long-term and these are the short-term. We define it in the system. And quickly, I will define capital. Capital is nothing but the long-term liability is a part of balance sheet. So if I say that this is my BS balance sheet item, this is my balance sheet item, and this is my balance sheet item. Now remains is expense and revenue. That is again further divided into capital. I would say that I would assign capital 3000 to 3999. These are the codes we have. Expense again two types: administrative expense, admin expense, and operation expense. And revenue that we have sales and interest income. And here I would assign 4000 to 4999, and I have assigned 5000 to. Okay, revenue would be here. I put it here this way. Okay, it is, I would assign this one. And 5000 to 5999 is my this one. Now it should be symmetrical. So if I an account I see, I don't know what is the account, but it start with do, I would quickly understand that will be a liability account. 1 with the asset, 2 with the liability, 3 with the capital, 4 with the revenue, and 5 with the expense. Okay, these are the code that we have. So in any organization, they remember with the code, not with the name. Okay, so this is the charts of account structure that should be defined efficiently so that these are the few items or accounts that I have mentioned. Let's go into the system. I will show you a lot of accounts that have been defined based on here or on the business requirement. So if I go there, start proxy, and we have Teresa. She's terminated, no problem. And here, I would see account set. In Workday, all charts of account defined within the account set. We have create account set and view account set. Now there are a lot of accounts that had been defined. I don't know which one is the standard one. How can I check that which one is a standard one or I have to take? There is a one way that you open up the company, GMS USA. All of the transaction we will go from here. Go to the related action button. And I want to check the charts of account of this company. Go to the related action button, go to company, and then we have an option here, added company account details or view company account details. If I view the company account details, so the account set that is defined for this one, CFA. Someone has changed it anyhow, no problem. the charts of account that has been assigned CFA. If I want to open up this charts of account, click over here, and then you can see that someone has defined CFA account set, and these are the, oh my god, someone has defined different way 106 1060. This is a bad way to define this charts of account. That should be symmetrical with the proper length, and that should be designed within that. So 202410 overpayment is there, customer account, retained earnings. So Apex that has been utilized. Well, okay. Capital, here capital is having 3,100 in the equity account, and retained earning current year, prior years are there. Revenue is 4,000. They have given it. We have given also the 4,000, and here 5,000 is given to the expense. Cost of sales, bill, travel expenses are there. So these are the expenses you have. So your charts of account design in this way. Okay, now I cannot delete any value because all the transactions are booked, so that you cannot delete it. So any transaction happen with the charts of account type, that then you cannot delete it. And these charts of account utilized by 68 companies. These are the list of the companies. Wow. Anyhow, 68 companies that are utilizing this one. So we know that this is our charts of account now. Now here, the first part that is confirmed that charts of account is there. Now what will be my second 4 C's? We are talking about 4 C's here. First is charts of account we have checked, that is CFA. I put it here this way. So it's CFA, account set is CFA. Now the currency that if I want to check it, then that is very simple, country currency. This shows all the country currency, but for the business currency that is here in the accounting details, we have currency that is USD that is already assigned. So USD, my second C. Currency, USD is my second C. Third one is calendar. In the calendar, we call it in Workday fiscal schedule, where we define intervals. So here we have a fiscal schedule that is assigned, that is WD, updated standard corporate schedule. Okay, fine. Here that is fiscal year that has been defined, and intervals are there. So these are all of them that are defined here and this list. So now if you can see that the 4 C's are available, one is currency, other one is account set, third one is fiscal schedule. That is the mandatory part that you need to assign it. 1, 2, 3. And 4 C is basically by default is there, that you don't need to update, that automatically Workday is not covering this front end, but it automatically built in process that you can set in your accrual or cash transaction within one ledger easily. Okay. So this is the accounting detail that we have for my company GMS USA. Now if I go back, my 4 C's are completed now. My charts of account structure is ready. Now here the important part is that charts of account is linked with your ledger. What is the ledger? Ledger is the books of account where you enter your financial transactions. This is called ledger. Okay, so this ledger is defined as well, and if I want to check that ledger as well, that's it. That is very simple. It is not coming here, so I have to go back to my company. Here you can see, go to related action button, and then we have option here, ledger. So create, if I want to create a new ledger, otherwise it has already been defined, so you can view the ledgers here. Here we have 3 ledger has been defined: actuals, commitment, obligations. In GL module, we go for actuals. Commitment obligation we will discuss in later stage. That is a part of which area that we will discuss in later on. But actual means that all the transactions are booked here in an actual mode. Okay. So ledger is defined for my company as well. So once the ledger is defined, then the calendar should be enabled. So when I create a journal here, create journal, then my company should be appear up here. GMS USA actual, not commitment, not obligation. So for the GL perspective, we always utilize actual here. Period, if I check this period, this is there. Then the journal source. For example, I am putting here manual journal. What is manual journal? We will discuss in a while. The rest of the things I am keep it open. So every journal is the booking area in any ledger, that whenever any transaction happen, we book that transaction within the journal. So journal always be booked within the ledger against the charts of account. I will show and in a while. And journal have two levels. One is called header, and other one is called line level. So here I'm filling this information. This is the header level. Fill out the header information and click continue to enter the journal lines. Okay, so this is the header information. We will discuss these values. We will come back this activity and we will discuss these values as well. Currently, the three mandatory things are ledger, accounting, and journal source that should be there. If your company is not appearing here, and if you have this error, then probably you didn't design your ledger properly. Okay, so you have to be very careful for designing this ledger. Once it will be available, I will click continue and go to the line level. So the header information coming up now at the top, and now it is the line level. So for example, I purchase a building for my company. So my accounting transaction will be building account debit and cash account credit. Building is our assets, that is A plus, and asset is decreasing A minus. So I will not go into detail that what is the accounting transaction is, but just to give you the idea that whenever any transaction happens, it have two impacts. One is debit and other one is credit. Any financial transaction in financial, we have two impacts. We have two legs there. System will not allow you to enter only one leg or one area. If I try to just go into the system and if I call a building, just to give you an example, that is 100. And if I try to save it, then here the error comes in. The field ledger account is required and must have a value. Which field? This one. If I deleted this line as well, then it will not allow again the same error. Journal may not be submitted unless it is balanced. Balance mean debit amount and credit amount. That should be balanced. So I have to add up line here. If I add up here line and see that this is cash, and there it is, 100 is my journal. Okay, now here you can see we have further information as well, but I'm not considering right now. Just to fill up here and then click submitted. So once it will be submitted and you know the business process is there, if I view the detail, it is submitted successfully, meaning that journal is booked and the journal number is something. Oh my God, someone has put it a range, test 18072210111119. Well, anyhow, no problem. So this is the journal number that we have it. Okay, so this is successfully completed and this is posted as well. Journal has different status. When you create the journal, that is in progress. When you submit the journal, it turns into posted. Financial impact comes only when the journal in a posted state. So here you can see that building and cash, debit and credit, that is equal, and transaction is booked. Now, for example, first status is created and other one is posted. Click done. Now, if I check this transaction in my reports, and there are three major four major reports that are standard reports are available. Standard GL reports to view the transaction. One is called trial balance. Other one is called P&L or income statement. And then balance sheet. Then we have cash flow statement. These four reports are to check their company work, to analyze their what is the spending of the company. Then these four reports are, backbone. Any ERP system provide these four reports. That is data must have. These are the must reports. So first of all, I will go for the trial balance. And do you have idea what is the trial balance? What shows that this trial balance report? Anyone, Shalu or Bijoy?
The summary of journal lines.
Summary of the journal. Yeah, you can see you're right, that just give you the both journal, all the journal status with their, that should be balanced. That trial before this called a pre-balance sheet. This also called a pre-balance sheet. So GMS USA actual is there, and then year is 2022, and summary period is okay. Year blank period I'm gonna check is October. This is there, and that's it. We will discuss this. Company currency is coming up. Translation currency we will discuss, and click OK. So when we have this transaction, October transaction, then you can see, if I go down, we have a cash here, and we have 156 items are here, and the cash will show me this. First of all, I will check the balance building. This is the building. So $100 is showing now. If I click over this here, they show me the exact journal that is I booked earlier now. Okay. So if I can open it, then directly I can open up this report. So this is a predefined report that is available in any tenant. So you can run it as per your company. Okay. Now here, if I go to the cash as well, cash may have more values here. 1,000 that is there, and that is credited. And here you have 100 caches here as well. So any transaction that is booked, and it should be posted. If it is not posted, then it will not show it here in any report. Okay. So posting is must. That should be there. And if I go back, and this is a posted. And status could be in error as well. Error in which cases that is there, we will discuss. Okay. So now here I can, for this journal, I can make changes, copy it. If I copy this journal and click OK. Okay, period is today's date and click OK. Make a copy of this journal. Then you can see that still now this is not there. I will click on save for later. Once it will be saved for later, status is created. Okay, so we have a report here, another journal status if I want to check, and that we will discuss in our close period as well. That is the report at journal status ledger period journal status report. Now here, if I open up here, GMS USA, period is 2022, and that is October. Click OK. Then you can see that posted, two are posted. If I check over here, one is 100, that is earlier I have created. And then we have pending accounting journal event. And in that update in posted, okay. One more where is created one. Okay, here unposted, these are all the status created. We just created one. Here we have created. We will discuss this further status for formatting, progress, unposted, cancel. We will discuss later on in the close period event. So this is another standard report available by Workday. When you go close your period, this is helpful. This is very helpful report. So creation, and if I again go back to this, change the values here and submit it again, then you will see that if I go for building again, because I have resubmitted, there is no impact is here. Until unless it is not posted, the impact will not be shown here. Okay, so this is there. Now we have seen that journal. Now let's talk about this first report we have seen. We will discuss these later on. Let's talk about the journal type. Journal type in Workday. I'm talking about here in Workday, especially now. So in Workday, there are two types of journals. One called accounting journal that we are seeing. Another called is operational journal. Okay, what is the difference between that? It is very simple. If accounting journal created manually within GL, then all the journal will be accounting journal. Let me show you to here. If I click over here as well, once again, and open up this journal, then that is view journal, and accounting date is there. Sources manual, and if I go and show you the sources, because these type are defined on the sources part. So the manual is the accounting journal source. So if I show you the source, journal source, source means that from where this journal is coming. If within the journal is coming, then that source manual journal is my accounting source is there. And if I show you the manual only, this is another report. Manual journal, that is yes, meaning that it is accounting journal. If it is yes, then all the sources related with that all are accounting journal. But if it is a no, and if I remove this filter and there is a no, here this is meaning that this is not the accounting journal, it is operational journal. Operational journal means that it comes from any activity or from any other module. Any other module means like it's from coming from APAR, cash management, CM. It's coming from there, from this module to GL module, then it will be an operational journal. And we will see in this module all this operational journal. So that is the important part. You have to figure it out first, that which journal is the operational one and which one is the accounting journal. Here, this one is not manually created, but created through certain activity or operation. That is operational journal. So AP create the invoice create the accounting entry from that is expense debit, accounts payable credit. So this is the debit and credit 100 to 100, and that's from invoice to its go into the GL module automatically. Then it is will be operational journal. Okay. So these are the types we have it. Now coming back, we talk about journal source now. Now we talk about the validation here. What is the validation? So validation means validation. In Workday, we have two types of validation. One is the standard, other one is customized. Standard mean that Workday have put a certain validation that is a standard. Like, for example, when we create a journal initially, then if I miss something, I just missed a ledger and put it here, this one, and then continue. This is the validation that Workday did it and make it mandatory. So ledger is must. So it say that GMS USA is there. This is one validation and continue. Another validation is that this account should be balanced as well. So we say that this is building. This is validate. And again, I would submit it. Again, error. This is system validation. Now this system validations that are there and Workday made it mandatory. Certain validations we like balance journal, mandatory field that we discuss. Customize means that certain validation Workday has offered us that we can put it this validation. That called custom validation rule, CVR. That stand for CVR. What is the custom validation rules? For example, I want that let me show you in the system that whenever any accounting entry will enter, if I mention here cash and I fulfill all the system validations here, that it will allow me that I can submit this journal now. But I want here, my manager said that, okay, fine, you are entering certain transactions. And for example, I paid certain expenses like utilities expenses. So whenever any expenses that are been entered, so which department made these expenses? So we discussed last day that we have a structure in that there where we have a department as well. So I want to check which department made it expense. So we have a 4 department. And we have entertainment expense. So we have some budget, but marketing team made it a $20,000 expense in a month, where it has 300, it has 500, and it has 200. Now, if I enter the transaction without this one and see that what is the entertainment expense over the month, and I would see that this is something 21,000. Now my manager will be shocked at who made these expenses in the last month. So we have to make a check here at which department is making an extra, our budget is something $15,000. Now $6,000 is excess amount. So I need to put a check here at who made it this extra expenses. So what I will do, I want a validation here that whenever entertainment expense or utility expense entered or any type of expenses entered in the system, that should be booked with the cost center. And I have cost center, this one here. So Workday make it not mandatory, or Workday didn't see that this validation rule is for all, but for my business, that is mandatory. And I want that all the expenses entered by the department that should be charged to the relevant department as well. Okay. So these type of validations. So here we have a cost center here. This one. I want to make it mandatory. So these fields can be validated in a custom validation rule. So what is the custom validation rule? If I show you here, okay, that maintain custom validation. So here we design our custom validation. On my right side, all the areas where we can put it this custom validation. For example, I want to put it on my accounting. So we have accounting journal. And here we have 2 types of validation. One is critical, another one is warning. Critical means that you have to fulfill that one. Otherwise, system will not allow you to go ahead. Whereas warning just make a caution or alert, and then it will you will go ahead. It will not stop you. So this is the custom validation, and you will build this validation from here. You put up the condition here. So whenever any expense will be entered, it will be automatically routed, or expense cost center will be entered here. Okay, let me check that. Otherwise, I have to prepare this validation rule, and then I will show you what is there. Okay, just to check that. CC, I will put here ZT, CC, or mandatory. Now here, I can create a statement that company is my there. For my company, especially, I want to assign it. For my company, I want to check it from here that which one is the relevant one, company financial dimension. Okay, this one is the most relevant one. And if company is frequently used in a selection list, and that is GMS USA, that is there. And again, now here for my company, the account type for all the expenses, I want to put it here. Sorry, account type. Ledger account type. In the selection list, okay, I want to check for all. Is the selection list. Okay, that is here. We have all the type is here. Balance sheet account type. So many has someone has defined, but I will put it here expense. This is the validation. If it is expense, then cost center. Cost center. Is empty. Then put it the error here. So I would put it here control okay. And now here I can check that my condition is set in for ZT here. If it is there, yeah, it is there. ZT is mandatory. Let's check it. In a quick way, I just design it, but there are other ways that you can put it this thing. So let's check that it is putting me error. Yes, error is there. ZTCC are mandatory. It is error, as otherwise it will not allow me until unless I will make it mandatory. So if, for example, I put it here, this is the utility is the expense. Now, if I put it here building, does this error comes in? Should be this error comes in or not? Let's check. Now there is no error. System will book this transaction. So my condition custom validation rule is triggered. So this is how you maintain the custom validation rule within the system as well. Okay, so this is there. Now, if I go and this is the validation part, standard and customized, we discussed it. Any question till now? Bijoy and Shalu.
Oh, we are good.
We're good.
Okay, that's good. So here now we are gonna have another topic here. Now, if I go back and one of my journal, create journal. There are different type of journal that you can create in the system. So here we have sources there, but these are the different type of journal. We can record quantity, multi-currency journals, adjustment journals, and reversal journals. Now, every journal have their own meaning. Okay. If I want to utilize this GL module as my inventory that, for example, if I purchase an item, I did purchase it and I want to record as a quantity, then I can go for the record quantity journal. That is very rare, but normally you can utilize this journal as a quantity as well. Then we have adjustment journal. Adjustment journal meaning that, for example, I booked this transaction earlier, building account debit and cash credit, and that is amount 100. Suddenly, I will realize that $100 building will nowadays, if you go to purchase a $100 building, then it will you will show that transaction is fake transaction. So probably this transaction is not correct. So probably that $100,000 building was there. So we missed my my user or my accountant missed these transactions. So I have to rectify or make adjustments. So we have to here called adjustment journal, because that early journal is posted, so we cannot change it. So, but we can enter some adjustments. So what we will do, we said that this is GMS USA, and here date is today's date, and considering that this is adjustment journal, accounting adjustments, and here click continue. Now, what is the adjustment that you want to have it? Building debit, 100 already booked in. So what is the difference between that? I can check. Equal to this minus this one. So I have to book 99,900 transaction now. That is understated. So two terminologies used, that is understated and overstated. So this is understated right now. Or if there is another adjustment that we can see that, for example, that accounting entry was $100 was there, but that accounting dollar is correct, but this is the wrong account that we have charged in. So it should be some assets is there. For example, some plant equipment, something was that. So we will make a adjustment entry accordingly. Here the accounting will be building should be reversed and plant and equipment should be debited here. So here we will define or assign this accordingly. Right now, this is the different ways that whatever the adjustment that you need to, you will make it on that way. So it is their cost center. If I put it here cost center now, because it's okay, this is not the cost center. This is simple assets, so it will not give me any error. So this is that called adjustment journal. Okay, unassigned task is there for adjustment journal. So you know that how to resolve this unassigned task. Have you done this in HCM?
Yeah.
Yes.
Okay, fine. So this is unassigned right now, so you can rectify and fix this thing. But this is the adjustment journal that you were discussing, that how it will be entered. Now, what another important one is the reversal. What is the reversal? Okay. To understand the reversal, you have to understand some concept called accrual. What is accrual? Anyone knows? Or Shalu, you have the idea? What is accrual?
It's the projected expenses.
Okay.
Like in payroll, if it's a bi-weekly period, even though the month is closing,
Yeah.
it's not in sync with the fiscal period, right? So we would book the expense in the period when it happens, and then we will reverse it for the next period.
Very true. Very right. Yes. Yes. You're given a correct example. Accrual are basically two type again in accounting. One called permanent accrual and one called temporary accrual. So the example you have given is the temporary accrual, and temporary accrual always be reversed. One example that you have given, another example I'm giving you. For example, I purchased one inventory item, like that is some charger, laptop charger is there that I purchase it. Once I purchase it, and today's date is somewhere 28th October. Okay, so today is 28th October, and when I purchase it and supplier has delivered this item, and when it delivered, so I booked it, item charger, account debit, and some. Now when it delivered this item, but it didn't send it any invoice. But I received this item in the system. Now invoice is not comes in, so supplier, I'm not sure that which supplier has sent it this invoice. So what happened that, and we are about to close our month end. So we basically raise a liability by ourselves in the system so that when the actual liability invoice comes in, we will adjust those liability there. So what we'll do that we booked it here, temporary accrual entry that is called AP accounts payable account credit. Charger amount is something $50. So this liability I created by ourselves. I don't know to whom I have to pay, but we received some $50 charger here. Or even if we know the supplier as well, but we didn't receive any invoice. So we say that we received this charger and we booked in the transaction in the system, that is temporary accrual that is there. Another way that you have told me, already given example. So some employees are there who work on a project, certain project. And when they project a certain project, we pay some salary to them. Now, if on a 20th October and 30th October, consider this is 30th October, we say that the project or task isn't completed, so we cannot pay this salary, or we cannot pay the dues to the employee because the employees are on the contract. So contract is that when they complete their task, then we will pay accordingly. So till today that they haven't completed their task, but we have to say that we have to pay certain expenses. So salary account debit and payroll accrual account credit with certain amount that is considered $400. So this temporary accrual that we have raised on ourselves, that should be reversed in a next month, so that when the actual task will be completed or actual bill will be completed through invoice, then we will book accordingly. So when on the 1st of November, we want that this type of transaction should be reversed. And once the new invoice comes in, then we will book accordingly. So what happened? We utilize this functionality called a reversal, create reversal. So if I say that, for example, today is the GMS USA, and we have 31st October, and we say that this is accrual journal. So we have to check this one. Now it's automatically this pop-up and enable, and that is mandatory that when it will be reversed. So 1st of November, it will be reversed, or you can change the date as per your need. So what happened? So now if I enter this journal, so I didn't need to remember these all type of transaction. Only one check in the system will update or reverse the transactions there. For example, here, I will put it here, salary account debit, pay agent salary expense, okay. And then we have payable here. Accounts payable or okay. Expense payable reimbursement, employee expense payable, okay. This account payable we have used. And that amount is for something $400. 400. Now, if the account is not available here, then you can go back in the account set, view account set, and you can define that account as well. That is CFA. Click OK. Now I want a payroll accounts payable account. So I have to go back. Now here, what I will do, okay, sorry, this is not view, it is added. Task is added account set. This is CFA. That's there, click OK. And here I would add up, we have a plus sign, we can add. We say that this is 2050 something. Now it has already been assigned, so I would change here 2150. It is not there. Oh, it is I put it 550. Oh, 7. It is there 2557. Consider that. Here we have payroll accruals. type is liability, and this is there, and click done, or I'll do another. So here I've done 2557 is defined. Yeah, it's defined now. So it is defined. So I will go back and go to my system, and then I will call 2557. So how it is defined in the system, that account is there 400, and that is there. Salary expense is there, so I have to give in the cost center as well. Given any cost center, see, okay, cost, just to give in any cost center here, that is there, and click submit. So once it will be submitted, it is booked. So let's check this journal is created with 400 with the payroll account. Let's find it this journal on a 1st of November. Point journal. Here we have TMS USA, and we have to check that either it is created or not, 2022. And we have November, because 1st of November is called stat NOV. And here, okay, here you can see the first transaction, only one transaction is created, and here, and that is posted as well. And earlier the salary expense account was debited. You can see here, salary account was debited 400. Now it is reversed with 400 credited, and payroll is earlier credited, now it is debited. So ultimate impact is 0. Now consider that, for example, now here we want to make a payment to our employee now on a 10th of November, then you just create journal and put it the salary expense there, a normal journal that you have entered. So now you don't need to worry to reverse it next month. System automatically did it. And we say that, for example, this is November 10th, the task is completed, and we say that this is manual journal. Here we have salaries, accrued salary wages. Okay, this is another account that is already been there. So what was the account was there? Payment salary expense 6030. 60030, that is debited. And now I would say that actual payable account, or we say that cash, we pay it directly. Then we say that we have paid to the agent after completion of their task. So if you go back, it's giving me an error. And if I go back and if I verify this thing again in a trial balance, report, first I will show you the October, or I will show you the November directly, where we have one reverse and one actual, that is transaction is there. Adjustment only, allocation for former journal. Okay, fine, no problem. Here we have 6030. This is there, filter it. Now here you can see salary account 400 balance. Balance means previous month balance. This is 31st December or October balance is there. Previous month beginning balance. And here we have one debit and credit, and ending balance is 400. When it is debited, when it's reversed. And actual was created on 10th of 11th November, 10th of November, sorry. 1st of November, it is credited automatically. And here we have 1st of November, that is credited. So trial balance give you the exact picture that where it stands. My expenses are standing now. Okay. So here, this is called a reversal journal. This terminology of we need utilize this function, that is temporary accruals that is there, and reversal of these accruals. Whereas permanent accrual are very simple. You just don't need to utilize this temporary accrual balance. You book only accounts payable part, directly accounts payable, respect of your supplier. Okay. So this is reversal and accrual. Okay. Now, one last journal just to conclude our today's session, that is recurring journal. Recurring journal create, edit, find, and generation. Recurring journal means that such journal that is created on a daily basis or very frequent in nature. Some journals are monthly basis that are created, like for example, I need to pay the building rent paid. Now every month, monthly basis, I have to pay the rent. So what I will do, I will create one journal and then I will create multiple journal on a later stage. Okay, so that is for something, for example, $350 is on a monthly basis. I have to pay October, November, and December. These are the journals that we have. Okay, now this type of journal every month I need to enter this journal. So instead of entering or remember these type of transaction, you one time define this template, recurring journal template, and then system automatically book this transaction on a specified date. Tell the date of contract. So how it can do that? We have create recurring journal template. What is the GMS USA? That is there. And okay, and click OK. Template name is rent, monthly rent. Obviously it is monthly, but we want to generate the recurring. So I am here putting here daily rent just to show the transactions. So there are different status available, created, not available. Available status that should be there, created, not available, that will not be triggered. So for example, today's date is 1st of October to 31st of December, that template will be utilized. Journal source is recurring nature. That is not defined. Well, someone has deleted or somewhere. Okay, fine. We can see that this is manual journal. Source is there, but anyhow, we can create this source. So create reversal. If this you wanted to make a reversal as well, then the same treatment is there. Click create reversal and system give you the as per reversal as well. So it is something every month I have to pay $300. Then period summary schedule, none of above. Period means for a specified period that I want to trigger. When the period will open, it automatically created. I said no, none of above, and then I would say that it is rent, office rent, and the cash is there. Of which amount? $300. Now here I have to put it cost center as well. And that's it. And that's it. And there is any contract that you want to attach, you can attach it here. Just make it simple, click OK. Now it is available. And the transaction is there. Now I have to generate this recurring journal. Recurring journal generation, company is GMS USA. Ledger is actual. Accounting date is 1st of November. Let's check it and then click OK. So here you can see daily recurring journal that I want to trigger is this one. Select one item, click OK. That is November is generated for the November period. Journal is created now. It's in a created state. I can amend it here if I want to. And I just go into the related action button, journal, and edit it. If I want to add something in this journal, for the time being. November rent. Or if I want to change the cost center here, I can do that. Okay, and then click submit. And that's it. Your recurring journal is generated and is posted as well. Clear? So we gone through. This is called a recurring journal. So today we have concluded our maximum activities: recurring journal, reversal journal, validations, standard journal we have created as well. We see that charts of account. We viewed at ledgers and charts of account and currency calendar that are there. Tomorrow, what we will do? Tomorrow's agenda is revaluation. So it's you just consider it's assignment as well. That tomorrow, first of all, you will explain me what is the revaluation, what is the purpose of this revaluation that is there, and then we will go for translation. Then we will move for consolidation, and then we will go for month-end closing and year-end closing. So our agenda, next day agenda, tomorrow's agenda is to cover up these 4 areas. So your task is to, what is the difference between revaluation, translation, and consolidation? What is the purpose of it? Why we need to have it? Then we will perform these activity in the system. And tomorrow there is another activity that we will check another type of journal that we will cover up in revaluation as well, and that called multi-currency journal. Sorry, journal. Multi-currency journal, that will be in one task. We will do this activity. Okay, so till now, any question?
So, Maddie, what's the BP for the reversal journal and all those things which you showed us? Can we do any kind of customization on that, like adding some steps or going for approvals or things for
Yeah.
any journal?
Approvals part that is there, that you can do it. Here we have process for example, recurring journal, we have process. We can add up here. That is accounting manager and accounting supervisor is there. So Teresa is the person who is accounting manager and accounting supervisor as well. Then we can do that. We can add up here. Okay.
So the BP would be accounting journal event.
Yeah, accounting journal event.
Yeah.
This is the accounting journal event. We have it. Okay, tomorrow we will discuss this part as well. No problem, no worry. Accounting journal event. We will discuss it. If I will explain you in a quick way. But yes, we can add up the things here, and we will check that how to add up the event steps within that process. We can do that easily. That is no problem. But for any kind of customization that you are expecting, okay, tomorrow I will show you one more area. I missed one thing. I just remember, that is EIB. Have you, I think you will know that EIB, what is the EIB?
Yeah.
You know what is the EIB?
Yeah.
Okay, do you want me to show this EIB in journal or not?
We know how to run a EIB and create the EIBs. We just need to know like what are the web services typically available.
Okay,
for
fine.
EIBs. Yeah.
No problem. That we can
Like,
discuss.
yeah, which areas are like typically where it's more used in the finance side?
Okay, we will do that. No problem. It's okay. So, go ahead.
So that general source, right? So typically it is appearing in all the places. Where do we actually define that general source? Like it's coming as a list of values when we create a journal and all that, right?
I have shown you that journal source. We have a task, journal source. journal, maintain journal source. That is a task that where I have mentioned that which source is my accounting and which source is not my accounting journal. So I have shown you, and you
Okay.
can define any number of journal sources there.
Okay. Maddie, there is something called work tags very frequently used in the accounting, right? Like we do not use much that in payroll, but we have heard that that's important concept in finance, like work tags. We don't know what it is, but
Okay. I thought you know, otherwise I was skipping this thing. So wherever you think that which area that you want to touch in, that's why I asked you for EIB. I thought that it will be covered up, but anyhow, we will discuss this work tag. No problem.
okay.
What is work tag? How many types of work tag? What is the configuration part is there? We will discuss this thing. No problem.
So is it more related to costing side, work
No,
tag?
it's more related to reporting side.
Okay.
Reporting side, it is more related because the values that you is defined in the journal, later on you will you prepare the reports based on the work tags.
And you can have custom work tags.
Well, okay, this is the type that I will explain you. No problem. Okay, we will discuss this part in a detailed way.
Okay.
Okay, so these are the agenda that we have it that we will cover up in next sessions, and anything else you go through this and if you feel free to discuss wherever you find any challenge. We will discuss this thing. No problem.
Can we have any study material or guide which we can
Okay.
refer to?
Yeah, I have shared with you the ZT guide. Who's there the number? I would ask them to share with you the guide.
Okay.
Okay.
Will you be covering up the costing part? No, item costing and all those things like in
Item
the.
costing is the procurement area, not the journal part. We will discuss this part in the procurement area.
Yeah, okay. Actually, we have in payroll side, we come across this term costing. So, but we haven't used it mostly in any of the projects. But wondering like how do we relate that in the payroll side of
Payroll is a different part. The costing of payroll is a different thing, but item costing is a different one. How you correlate payroll and item costing? That is two different area, procurement and payroll.
No, let's keep on our focus on this side. Yeah, not go
Okay.
into.
Fine. Sure. Okay. So see you tomorrow, same time.
Okay. All right.
Thank you.
Have a good day. Bye-bye.
Have a good day. Same to you. Bye.
Thank you for attending the session. I hope you all enjoyed it. Don't forget to like and subscribe to our channel. Also feel free to ask your questions in the comment section below, and we will reply to them at the earliest.